Dan, talk to me about these record highs. Does anything about this market, the fact that it's led by so many companies that are getting bigger and bigger, and yet there are fewer and fewer of them, any of that make you nervous?
I mean, look, the strong are getting stronger, and you're seeing that with FANG names continue to outperform. And look, we think FANG names could be up another 20-25% over the next 6 to 9 months, with Apple our favorite. But I think what's starting to happen now across cloud, across cybersecurity, e-commerce, you're seeing just a lack of secular growth stories. And those names, whether it's 15, 20, 25 names that fit into that, or even the work from home, those are stocks that are going to continue to move higher. And we think, we're only in the 6th, 7th inning of what we see as the rest of this rally coming through.
And you're seeing the rest of this rally through 2020? Or are you looking further out into 2021?
Yeah, I mean, we believe, especially going into next year, there's been a two-phase way that we've sort of, from a client perspective, to play this COVID-19 pandemic and the sell-off. It started in March, April, where you looked at these rebound names that can navigate through the storm on cloud, and I think you saw a lot of these multiples re-rate. Now you start seeing economic rebound, and you start seeing more normalized 2021 numbers. That's phase two. I think that's the second piece of this tech rally. And I think we're going to start to see that as we go through 2Q numbers, where I do think a lot of these street models start to move higher. Of course, we're going to have volatility with second wave fears and obviously a very shaky macro. But I continue to view tech as we're bullish, and we still think tech stocks have another 20-25% ahead.
Well, and Dan, you've been bullish, and frankly, that call has largely played off for you. Curious, though, as you dive down within tech, some of the names we know, and Amazon, right? That's a classic work-from-home stock where the benefits were pretty easy to spot. What other stocks, sectors do you like that perhaps might not be as obvious?
Yeah, I think in terms of ones that are not as obvious, you start to look at cloud theme and maybe what I would view as almost a tangential beneficiary, which I think is really going to be a huge theme over the next 6 to 9 months, is cybersecurity. You look at these are companies that are really guarding as more enterprises are moving to the cloud. Companies like Zscaler, CyberArk, Varonis, Palo Alto, which I think is starting at a second life. I believe cybersecurity is going to be a massive phase of consolidation. And even though work-from-home names like the Zooms and the Slacks and others have been the main front and center, I think you kind of go to that next layer of cybersecurity, and even some of these cloud names like a DocuSign, where I still think that name has a lot higher to go.
Within consolidation, who do you see as a merger or a acquisition potential?
Yeah, well, I think you're going to see both strategic and financial M&A. I think there's going to be a buying spree over the next 6 to 9 months. And especially in cloud, what's starting to happen is that cloud and cybersecurity, you're starting to see more of a blending. So you're going to see more strategic acquisitions. We've talked about Microsoft. You could see Oracle. You could see SAP and some of these other larger companies starting to look for more acquisitions. But I think the prime space is cybersecurity, where I think you could see 10-15% of these companies be acquired over the next 12 to 18 months.
Dan, we can't have you on this program without talking about Tesla. I'm shocked at just this stock that keeps climbing higher and higher. Is it China demand? Is it the EV market? Is it batteries? Is it just a short seller squeeze? What is that bull case for Tesla that, frankly, you've been relatively correct on so far?
Sure. Look, and as we've talked about over the last year, a lot of it was the anticipation about the China market, the Giga 3, what the trajectory is. And now it's not just talk to talk, it's walk to walk. You're going to have 150,000 potential deliveries in the first year coming out of China. I think China's worth $300 to $400 to the story. So I think fundamentally that's key. And then you look at deliveries this quarter, 90,000, and what looks like in the area code of profitability. And that's a jaw dropper in terms of a number. Now you could be looking next 2 years, 1 million deliveries. you start to trajectory that out, $20, $25 of earnings potential. That's why I believe a $2,000 stock is, I think, the next trigger point where the stock can go.